Go next with gold, and the 4th November I tried to short gold. I wasn't paying attention because we have a fib on a bigger scale, and the price reached that fib in the golden zone. It was a very strong confluence for eventual reversal. Did it take place? So it wasn't just let's just look at this structure. So we have big candle, 3 big candles, and then small slowdown, and then a strong pull towards upside. And it was already fib. It was already fib 50. And I decided that the pullback is big enough, so now I can enter short. Yeah, because this was short. So on a pullback, entering short, not having bigger picture in mind, and not waiting for the pullback to happen, because wait, I just deleted the line. How to is there a possibility to so it was somewhere around this. So we had a pullback in the golden zone. On the 1 hour, we can see a hammer candle, which is actually a bullish pattern. I was most certainly not looking at this in a bigger picture. Let's study a few pullbacks. Anyway, exactly the same stuff happening. So if I wanted to enter on this shallow pullback, I should be waiting at least for the price to go in the 61.8-ish range. And when it did so, I should be waiting for confirmation to enter. And there was no confirmation. So the first fib was a very impatient approach. So I see retracement, I react. But there is a bigger retracement which I should be focusing on. And still, having this bigger retracement in mind, you could still follow the impression that the price is retracing and the trend is continuing in the downside, because you simply have the candles in this range, and for example this one candle, although it has some slight bullish tendency on the wick, you could take it as an engulfing candle to the previous ones and still enter short. Here we go with DAX. It should be German 30, but it's probably German 40. I was shorting it over there. I was hoping, like, again, hopeful trading, wishful trading, and calling the top, not having any confluence to enter. It had to be probably a scalp, some sort of scalp. Funny rectangular candle with no wick whatsoever. I have no idea why would I short it, but still it could work out. Like a few pips above, you can see the price came down. And look at the volume. Why there is no volume? From the range of the trade, there is no volume. Interesting. We can analyze the environment around entry. But we don't have to. What is there? I can see that we have a series of fibs, which were also like a wave. So first wave, second wave prolonged, and third wave, very prolonged third wave, which was then a reason for the price to fall to 88.6. But you know, trading it like that on a index like German 40, you probably would be able to trade it like a position trader even, or at least as a swing trader. But we are interested in entries, day trading entries, or even scalping entries, a good scalping, informed scalping entries. But scalping is dangerous because you never know if the trend is going to continue now or not. And so let's start. The first impulse was a reversing impulse, and it went down to golden zone. The second impulse was 29.2 and stayed like that. So it respected only 29.2. It's also funny and interesting to see, because you know you could actually argue with me that why you are measuring like this if you could just simply take it and just track some retracement, for example this small retracement where you can see there is why the candle was pulled magnetically. So there is a move up and bearish candle, so you could take it from there and you would have a normal fib like 61.8ish, because it's complicated. You could take it from there, you could take it from there, and now you have 50 and not 61.8. So it's better to just have one method, and then you can actually see and rely on different things. Like in this environment, you shouldn't be forcing a fib, but just rely on moving average, rely on 29.2, or on VWAP, for example. But 29.2 in this case is also doing a great job, as you can see. And also having this like that, where 29.2 is a strong support or resistance like level where the price floats around it. And now we can move towards higher places, towards a top. And when you see this like that, when you see that the moving average crosses the 100 with 50, and then the 100 with 200 with 55, which is actually, you know, stupid, because you have, okay, I'm stupid. Nothing is stupid. My English is stupid. So when you have a price action, you can observe price action and you can know before the moving averages that something is going on there. But you can see 29.2 level is respecting, the price is respecting it, the price is trading below it and going up to it, and then we have a huge gap on German. It's amazing. It's a big gap, which was then consequently filled again. But you know, this is actually very dangerous to trade something like that. And I decided to short it over there, not over there. There was no structure for it to short, so let's not look at this in a too detailed way. But I want to talk about each losing trade that I took, to learn from it, to remember it, to make some neural connections with it or around it or about it, and to prevent it from happening ever again. Look at the moving average, how it almost perfectly aligns with a straight trend line. That's some sign of a very strong trend. This is S&P 500, US 100, US 500. Very strong bullish trend. And suddenly me deciding to short it, I describe this trade as a counter trend trade, calling the top, betting for a pullback, a deep pullback. So look, every time we had some kind of pullback, so right now it should happen as well, but it didn't. This time it didn't happen. This time it happened. This time it happened. This time it happened, but it was not that deep, and it took a while for the price to go actually deep. So betting for a pullback is not a good way to trade. It's better to wait for pullback and buy from the pullback in a bullish trend, and sell from a pullback on a bearish trend. Bullish, bearish. Sell, buy and sell. Okay. This is gold again. Previously I traded it twice and deleted one. Yeah, here were two position. One was winning, one was losing, or both were losing. This one is also losing, and now it is a long. but it was losing or break even. So let's analyze if it was the right thing to long it from there. $61.8. Should we be looking at this move? Probably not. So let's just focus on this current one at first. So what I can see is that we have many, so to say, impulses, which are also fibs. First, second, and third. The price was behaving strangely, at least, so to say, at least on this pair. At the top, from where should we know that this is a top? Because we had some fib retracement, and after that fib, which was a good one, the price did not reach significant highs from there, and the break of structure happened. So we had a lower low than the previous one, and then the price we had a fib which wasn't a perfect 61.8, and then the price slowly moved towards direction down, but there was still a lot of steam from those moving averages, probably a lot of remaining strength that has to be placed into orders, in short orders in this case. And so we had some time to enter shorts. Simply. It could be also, why wasn't this a simple consolidation, but it was some kind of like consolidation with a bias towards reversing? Because the candle flow and size ratio is quite good. The market is trying to paint the fibs and to simply like convince me that it wants to do something, but it doesn't do this with a lot of power. So this is simply like painting some patterns which aren't that good. We have a wick over there. We could even take a fib from a candles, not a wick. And then we are almost sure that this is not going to be a normal fib. This is not going to work immediately. So therefore we should expect a shift, but a gradual shift. And we're gonna have many opportunities to enter it. And so the price started to fall. We haven't had a strong pullbacks in this downtrend. Here was, I guess, the strongest pullback could get. It wasn't even 50. And me trying to long it from there, it was actually a good bet. But somehow I haven't succeeded. Position did not survive. Let's just quickly look at this. Let's just look at RSI. What did the RSI said? So the RSI shows that there was actually a bottom, or the highest, the biggest strength over there. And then we started to slowly normalize. And then when it was completely normal, the price reached bottom. Price reached bottom. Volume, highest volume, highest volume is a positive volume. So it also would suggest that if the positive volume is the highest, we are aiming for a upside. And my first guru ever liked to trade volume candles, and I remember this right now. Let's see if we can positive volume. Which one? Which candle has the positive volume? This one. But is it even a positive volume? This is a black candle, which is that's strange. No, actually, I don't know actually what to make out of it. And you know, volume candles, like this is what we are looking at. First candle, this one candle has the positive volume. Wait, it's not a positive volume. It's the increase in the volume. So this is what's being measured. So the first candle, if the candle has a bigger volume than the previous one, then the candle becomes the candle, or the bar on volume becomes a white bar. If the next volume is smaller than the previous one, it becomes a black one. So it's not a positive volume, but it's the highest volume. But we just basically have a volume range. So this is how my teacher was presenting the volume to me. And not just to me. So looking at the candles, looking at its volume, it's actually a good approach, I would say. Like this combined with the fib and with some Elliott structures, and also like psychological levels, it could give many confluences. But let's not be confused about it. And this is interesting to notice, because you have the candle and you have the volume, the highest volume. It always is about highest volume. If you see that the volume is like consolidation range. So the volume is like consolidation range. If we are escaping that volume range, then you could actually expect that it's going to continue, and so you can trade. So volume is more like a scalping, helps with scalping, with day trading most likely. This is something to be worth paying attention. So this was probably this kind of trade, like volume trade, but it's still probably my stop loss was very greedy was probably on break even around this candle and it got stopped out. Let's remember the volume stuff. We're gonna incorporate this into trading. So the first teacher taught me about volume, about trending lines, so trend lines, which is also price channel. I would say trend line is a price channel. Price channel is actually better. And about Fibonacci retracement, so corrections or pullbacks. And this was the basic of my first ever teacher in trading. It was a very difficult, expensive lesson for me at the beginning of my trading. At 2021, I remember it was something around that. It was just the beginning of my journey, and I was angry because this knowledge alone is not it's not going to make you profitable. You still have to put a lot of work and a lot of effort into trading to actually be able to start being profitable. So, but let's not dive into that. Let's just focus on why the volume trading is, because at that time I was most certainly using volume trading because it was fresh. I was being mentored by that guy, and this is how it is. So volume trading in combination with fib, in combination with moving averages, in confirmation with confluence with channels, with everything, could give us actually a nice way to trade. It's funny how it works. Like, again, we have another trade on gold. This time this trade was at 2 in the night, like it was after midnight, yeah, AM. So it was very early actually in the morning, but I was working night shifts back then. So the fact that I entered a reverse kind of trade just after entering one long, it just convinced me that I haven't had a strategy like 1 hour time frame looking at the chart. It was most likely like 2 minutes, 5 minutes or something in those lines, because I was in a different kind of sect, different kind of group back then, and I wasn't looking at the markets the way I look right now. So entering short on this candle, and it was a losing trade again, so the price went slightly higher from there, and this already caused me to lose. It was 0.2% increase, and I was gone. I was out of market. So I was just scalping back then and not having anything bigger in my mind how to actually look at the market. But the rules from scalping can be used on like 1 hour time frame. So 1 hour is a day trading, and you can also see that look at this candle, for example. We have the volume there, and then the price visited that place and rejected from there. What could it mean? It could mean that probably it's a good support resistance, that this is a very crucial point. So the lesson from there is important, and only by reviewing this trade from the 2021, from the end of the year, I actually reminded myself that how to trade volume, and I forgot about it for such a long time. It might actually add to my trading. And right now I'm looking at Ethereum on a daily time frame. Why on a daily? Because I wanted to just quickly go over Ethereum price. So at the 2021 I was involved into trading, into crypto trading as well, but I was trading crypto mainly opening positions on the spot market, and it was still very extreme to me. I was entering luckily somewhere at the end of 2020, and I survived this bull market. I'm looking at Ethereum because mainly I was involved in the altcoins, and it was a like extreme situation for me. I wasn't able, so I knew it's not going to be forever like this. I was making a lot of money on position trading. Unfortunately, I lost everything that I made, but luckily I haven't lost anything from my private like savings, from the money that I initially invested, and it saved my ass. It saved my ass. So without this, I would be probably somewhere else today. But still, it took me years to recover from that. Like this whole down, like this whole bearish market on crypto was also a very dark period in my life, and also this consolidation was also a very dark period in my life. It went for years like this. Only recently I'm kind of recovering, I would say. And what I wanted to do back then at the top was to learn about day trading and scalping and swing trading. But I was so deeply into position trading because of crypto, so that I wasn't able to focus on studying the normal trading, because the normal trading, the day trading is very stressful, and you can trade everything. You can trade Forex, you can trade commodities, you can trade also crypto. But crypto for me was always position trading, not a day trading on leverage. But I know some people actually make money on crypto as well, trading in on leverage. But I'm not that kind of guy. I treat I treat crypto like a gold, like buying position, waiting like 2 years, a year, and escaping. But calling a top. Like look at Ethereum, what kind of volatility there is. You had a top, and then you had another top and another top. You just can go crazy, with this fluctuation of prices and of your wallet if you invested so early. Yeah, I was heavily invested in that kind of market. But let's actually focus on what we are here for. This was a short. It was extremely difficult for me to not think about Ethereum or crypto as a life-changing measure. Like I was like, it was a religion for me almost. Like crypto change it can change your life. It's so amazing, but it also took almost all life from me. And I can say it's like with an open heart, I almost end up killing myself, but I unfortunately, luckily, I was too stubborn to keep living and try. So I wasn't even like trying to kill myself. I wasn't even, I haven't had time to even do that. Okay, so I was so busy with recovery. Like trading crypto is very extreme. Like day trading crypto, scalping crypto, it's absolute extremes. You should be like having at least one cycle behind you, at least one cycle behind you, to be actually able to scalp it or day trade it, because you can never say which direction is going to go. It follows Bitcoin price, so that's for sure. It follows Bitcoin price. Everything follows Bitcoin price. I was trying to short it from the stop, and still I got stopped out. So tell me, what kind of stop loss would it have be, or what kind of like greedy I was, and why would I even try to short it from there? So I was counting on a pullback. I was betting that the pullback is going to happen, which was true. But other than that, there wasn't a good fib to kind of count on pullback, some fluctuation in price. Yeah, only because the price was already high, I could say that, okay, it's going to fall back down again. But technically, there was nothing to confirm that. It had to be some really tight scalp on a 5-minute time frame probably. So I was trading. I was not having like the same approach towards trading that I have today. So look at this. We have 3 impulses back down. I mean up there. So first, second, and third impulse. So I was probably counting to 3. 1, 2, 3. Okay, 1, 2, 3. Let's go down, and it went down, but somehow I didn't manage to profit from this trade. So it was a ranging market. It was ranging market. We were trading down from this crazy high. Like this is the first mistake. You just get involved emotionally with the market. Like the easiest way to get involved heavily is like put your 100k in a pair, like this one, or like gold, and then try to scalp it additionally. Like this is you are doomed to fail. So there was a very choppy structure. Firstly, trading this in the range of 50, 61.8, and again 61.8, 50, which was very like choppy, strange, like a downtrend, uptrend, downtrend, uptrend. This is absolutely amazingly choppy structure. But still it respected the fib levels. So you could imagine like what kind of rush was there in crypto back in the days. So you have 61.8ish. You could think, okay, we are going to the moon, but no, we are going to the down moon, to the other moon. And then you have no, it's absolute madness. It's absolute madness to trade crypto. One, two, three, A, B, C. It doesn't make sense. Like this is so distorted. This is madness. It was cheating. It was live on cheat code to actually be participant of this kind of volatile market. Like you see this drop, like it was 4,050 and it dropped to 3,930 in just a matter of like few hours. And it still then came back up. I could be actually thinking of going long on this, not going short. Okay, going short. We have a strong impulse. It slowed down. Just the fact that it slowed down and it's at the level of previous highs. Given the choppy structure, okay. Very risky one. But I should be looking at the fib, at the trade like this, and then trying to long it, but it was more like a day trade or swing trade from there. Another trade on gold, a long from there. So I was trying to long it. I wasn't certainly paying attention to the 1 hour like volume strategy. I was just having narrow vision. Most certainly not paying attention to the more time frames than like 5 minutes, 15 minutes. I don't remember what the guru actually said and what type of strategy did he learn, but like from a perspective, I must say, like I don't remember that he actually like entered from a daily, or he was looking at the daily. Like daily was because as I said, I was mixing a position trading with scalping. I was very heavily invested into crypto. I was actually emotionally involved with my positions. Like it comes with time that you get used to bigger money, and it's very like exciting journey. And there are many pitfalls on the way. And I probably was a victim of the all pitfalls possible. So no volume, like from here, I would actually like looking at the volume, highest volume bars, shorting it, and also fib setup. Let's look at fib somewhere from above. From above, we have here a 29.2. Why is it not respecting the wick? It's not good. Now it is. Okay. 29.2. So if we look on a smaller scale, like from the previous like high, from the smallest scale possible, we have even 88.6. We have 50. We have above 50. We have 29.2. So it was rather a I don't want to buy a limit. I hope I haven't bought it. Even that small kind of position. Okay. So this was a loss. It should be short, but I wanted to long it from there. No retracement, just a wishful continuation of never-ending uptrend. No, it wasn't a good trade. Okay, let's have a quick view at my position in GBPUSD, where the price currently sits. There is also a point of control. It is not okay. You see, there is a point of control, and like giving a last like zigzag kind of move. And I think that there is high probability we might actually reverse from there and go short. But I entered over there. I was selling like to 0.2, 0.02, so very small position, very small risk. But still, it hurts like hell to see that, you know, having no fib, there was no fib for the price to go up. And right now, like the price is 61.8-ish from that move, and it still like wants to go higher. It doesn't make sense to me. But given the fib is distorted, so the bigger fib was distorted, now we can have distortions as well. And structurally, the price should be actually resting below that structure. And if it closes, then it closes, then I'm gonna accept the loss and that's it. But I'm not very happy about that. Like given we have volume profile, there it was the point of control is over there. So the price is being pulled in the direction of that. Never mind. So unfortunately, it was a stop loss. It was a stop loss, although I was thinking that, you know, the analysis that I do is going to help me. It did not. And you can see that there is a volume on this candle. It is the biggest volume in the range. So another one would be this candle, that candle. I'm very curious how it's going to play out now, because I actually lost some money on this one. I think I'm gonna re-enter if we're gonna get a reverse kind of candle over there. I'm not happy with this market. 61.8 fib, shallow retracement. The candles were the biggest volume. Let's also put that candle over there. So the candles with the biggest volume made a volume zone, so to speak. And this volume zone, the RSI was weakening, and only like recently it pulled above from a 50. It's kind of annoying, but I guess the market does only that what the market does opposite of that what majority thinks it's going to happen. Otherwise, the market makers would not make money. The big players would not make money. Okay. So if we would actually abide by the rules of playing the volume zones, then there wasn't a valid entry for either long or short until this candle. Like this candle was a clear confirmation that we are escaping this zone. But again, it would be counter fib to enter this. So probably right now, as I'm looking at this, I should be measuring at this fib, waiting for it to for the 61.8 for this kind of zone to be invalidated again. So it is invalidated by this candle. You see this clearly, right? And this zone was invalidated over there with this candle. And right now, the price is in a free flow or eventually in the zone, in the previous biggest zone. It's interesting how it's going to play out. But I think that this fib, although it's being disrespected, like we have an era of disrespected fibs, as you can see. The big one, 61.8, but the price went and closed below that. Now it hovered around 50, now has broken over 50, and we are creating now another fib, which is already being invalidated, 61 over 61.8. This is crazy. The market conditions are absolutely crazy. NAS 100. I was trying to long it, but not exactly on the midnight. I was trying to long it on 50-hour, 50-30. So it was 3 p.m. somewhere around there. I was trying to long it there. And looking on the bigger picture, we have some move which was already very high, and the price was around 29.2, so there might be some sort of reaction given the previous structure and how it was, but longing it was probably too early. And given the most recent fib, we have a very distorted 61.8, which wasn't a good sign either. So, I was probably scalping it back then, or like scalping without knowing that I'm actually scalping. And I was trying to enter long. So structurally, we had a bottom. It was not that good established bottom. It had only two and now three confirmations that it's there. Previously it also was a bottom, so like a support. So I probably was thinking, okay, this is going to be a strong support, so let's long it from there. But it failed. But it was reasonable to think that this might be the last bottom given the structure. Although, like in these conditions where we are in a downtrend, we are measuring the fib from up to bottom. We should be rather expecting a short, and we should be like, this is like a pullback, like a very deep pullback from this region. So around there, I should be perhaps thinking, okay, this might reverse, but it went down there and then a little bit higher, and I was thinking this is going to reverse 100%. No, it wasn't a good strategy. It wasn't a good idea. It was too early. No. Let's look at this in a more detailed way. Break of structure once. Now we have a lower high. Here's higher high, higher high. It wasn't actually a good place. Structurally, it wasn't a good place. And also this candle was like pointing towards a very like something wants to pull me down. Something wants to pull me down. This candle is yelling like this. And another candle was a doji candle. No, not a good fib. And on the smallest scale, there is a fib that says, I'm going down, I'm going down. So, probably narrow focus. And 70, it was like 70 hours. What 70 hours? 5 p.m. 5 p.m. 40. I was shorting this market again. So I had reflected that, okay, after seeing this, we must go lower, and it still was a losing trade. It still was a losing trade. So I guess very tight stop loss, very late entry. Like, I have failed to read market structure. I have failed to read the lower lows, lower highs, higher lows. This is also very important. Like, we can try to read it here. So we have here a high and here a higher high, and this is a lower low. This is a lower high than previous one, and this, and also than this previous one. So now we are probably entering a short market, and so it goes. And here we have lower low, lower high, lower low, lower high, but then the structure breaks for a while again, but still this high is lower than the previous, but higher than this. And then we have an equal low to this, so period of consolidation or probably some kind of reversal going on. Instead of reversal, we had a series of like pullback, which was prolonged. And then we had a top at the 50 fib 50 of that retracement. And then we had high, lower high, and then lower low than the previous one, lower high, lower low than the previous one, but equal to this, which gave us pullback. And we had a fib, and then we had a lower low than this one, but very strong recovery from there, which would give me a reason to think and to look for perhaps long, because in this kind of retracement you can actually want to look for long, and it's actually also a head and shoulders pattern. You can see the head and shoulders right there. Okay, that's it for today probably. Thank you for watching. If you actually watched with me. If not, then I'm glad I did this anyway, because I do like to watch it at least once after I recorded it, so that I learn a little bit more about markets. Sorry to see that the GBPUSD has failed me at Monday. It was unfortunate trade. It did affected me. It would be better to actually have a winning trade as a first trade of the week. Other than that, I'm gonna be scanning markets for all the positions that align with my strategy, and then I'm probably going to enter and also record something about it. For a short while, I'm gonna stick to MetaTrader 4, but 5, but the actual trades that I'm taking right now, I can analyze them on TradingView. It's a little bit more user friendly and not so geeky. So thank you for watching again. See you.